Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about removing negative information off of your credit report so you'll be able to move forward in this new year, have a better financial outlook, and get that score that you've always wanted to get. Now, some of the questions that I get a lot, and maybe you're thinking this way, and I think that it might be because of misunderstandings about what credit repair is all about, if it can benefit you. I'll get questions like, is it really worth it? Can it really work? Is it beneficial? And my answer to all of those questions is yes, yes, and yes. Credit repair can work, and I'm going to give you the foundation on what you need to be thinking about to repair your credit if you want to do it yourself. Is it worth it? Definitely worth it. I'm going to give you, share some stories with you in a few seconds, with some clients that recently just finished up their process. And I want to tell you about how it's transformed their lives and their thought process about them being able to move forward when they were really, when they came to us, they did not know what they were going to be doing and didn't know how they were going to be able to move forward. And is it truly beneficial? Yes. Yes. Having your credit repaired will be beneficial to you and your family on being able to move forward in your life. Having good credit is like one of the keys to opening up the door for you to be able to build wealth for you and your family. Like, it starts right there. Now, I come at you with the understanding that you want to improve your life. You want to either maintain your lifestyle or you want to improve. You want to protect your family. You want to protect your assets. You want to protect your money. You don't want any surprises. And I totally understand that, because as humans, we're creatures of habit. We don't want things to be changing. If stuff happens that surprises, we want it to be very good. Like, we don't want any bad surprises. And bad stuff is what actually keeps people from being able to move forward. It paralyzes them from moving forward. So first, before I get started, and what we're going to talk about is laying the foundation and proving to you with the Fair Credit Reporting Act on how you can utilize their own words to be able to repair your credit and increase your scores. I'm going to go through those, the things that you need to be paying attention to, so you can construct your credit repair process if this is something that you want to do on your own. But first, let me share some stories. Let me share some success stories. Some recent ones that where these clients came to us and they just did not know what they were gonna do. The first one, Yadira, she came to us. Her and her husband, they are buying a house, and the bank straight up told them she had to get her credit, the information on her credit reports had to get resolved. And when I say resolved, some stuff had to be settled, some stuff had to be removed. And she came to us, and I said, that in the credit repair process, when you're trying to buy a house, in the process of buying a house, you can't have anything disputed. And she was like, well, Steve, how am I going to be able to get this stuff taken care of if you're telling me I can't have it disputed? Because if you have something disputed and it shows disputed on your credit reports, mortgage company is going to automatically deny your application. And she was like, I don't even know what to do. This information on here is not accurate. I don't know what to do. She was throwing her hands up, and her husband, who is a business associate of mine, he was like, Steve, can you help us? Because I got to get this house. You know how it can be when you're the husband. I went through this. I shared my story with my family, with my three daughters and my wife, when I walked in the house, and they were like, we got to get this house. And I was like, oh hell, there was one thing that I didn't have taken care of on my credit, and I had to get that taken care of right away so we could get that house. And that was a long time ago. I'm glad that I had had my credit straightened up, because if I didn't take the time to get it straightened up, I would have had major disappointment for my wife and 3 daughters. So what we had to do in her credit repair process, we had to actually work with an attorney that was actually trying to sue her for $5,700. And with the back and forth with my office and me talking to them and talking to her and getting the whole story and then relaying that to the attorney's office, it ended up that she didn't even owe this debt. That she did not owe this debt. Now, I'm not going to go into the details about it, but it turned out that she did not owe the debt. So it was an account that she had. But with the review, and I'm going to go into detail about that with the Fair Credit Reporting Act, because it specifically states it there, but a lot of people skip over this. Even though the account was hers, even though she opened up the account, there was certain disputed information within the account that for some reason the original creditor did not relay that over to the attorney's office. Our back and forth with it, we were able to get it resolved. She did not have to pay any of it, zero, and they removed that information off of her credit reports without disputing. Removed it. The original creditor removed the information off of her credit reports without disputing, and the attorney's office, they never had put the information on there. Then she had 2 other collection accounts. One was a hospital bill. One was for another account that she had already made an arrangement with. And so what we did is we came in, negotiated with those to where she would end up paying less, because we're like, we can negotiate with those 2 collection accounts and have you moving forward without paying the full amount. We're able to do that, saved her about $1,000 on each, and then got those items removed. They're buying their house, but we did that whole process without disputing with the credit reporting agencies, because if we would have disputed with the credit reporting agencies, then it would have pushed back the window for them being able to go and get approved for buying their home. Next one that I want to talk about, and this is another person that wants to buy a home. Jerome, congratulations to you. We had to resolve $17,000 worth of debt. We ended up resolving it, saving him $10,000, plus getting the information removed by the original creditor. Original creditor had it. Well, they actually placed it on there where they took it out of negative status, which was arranged through the attorney's office that we had the back and forth with. And so with the discussions with them, and there's a feeling out process that you got to go through, because if they know that you're trying to get something, you know how they're going to be thinking. That's why we tell people you got to be careful. If you're going to do this stuff yourself, you got to be very careful, because if they get any inclination that you're trying to go out there and do something, guess what they're going to try to do? Number one, they're going to make it harder for you to resolve it. That's why some of the times, I'm not telling you have to, but I'm just saying some of the times you need to consider having someone in between, because if you don't answer specific questions when they ask you, and you're supposed to be the one that knows those answers, it's not going to be a good look. But we got him resolved. He's going to be able to buy his house. Information is going to be updated. And I'm going to talk about updating information on your credit reports and how getting it updated properly won't hurt you, and you'll be able to move forward. And in this situation, Jerome is going to be able to buy his house. The last one is Sarah. And I'm going to make another video on this one with the hardship. Please watch for that video. I'm probably going to land over the weekend. Sarah had an auto loan where she did not have full coverage on this automobile. It wasn't a very expensive automobile, but she did not have full coverage, was T-boned at a light by a driver who ran through the light, T-boned her in this car. They did not have insurance. She had liability insurance, and she did have gap insurance. So this is one of those times where the gap insurance did work out somewhat. It did not pay the entire amount of the vehicle off. She ended up owing money. So she needed to be able to move forward. She's a single mom. She came to me and she was like, this is my situation. Can you help me out with it? I said, based off of looking at the contract, this was one of those predatory loan situations. I said, based off of this contract, based off of the company that made the loan, I know this company had gotten sued in a class action lawsuit. I was like, I think that we could be able to get the amount that they're claiming that you still owe reduced, or we could outright get it forgiven. And so we created drafted up the hardship letter with the story. It ended up it took about a month or two. She was even, thinking, oh, it's not going to work. You know how you can get, when something doesn't happen instantly, like you're driving up to a window at McDonald's and getting your food instantly, a lot of people withdraw and they think that nothing good is going to happen. And, but this week, she got an email from the special department that they put together to review hardship documents, and they automatically came forth with a 20% settlement offer to her. 20% off of the amount that she had owed. And that was like relief to her. She was like, I can go ahead and pay this. And I said, well, let's hold on for a minute. Let's make a call, three-way call to the individual that they put in charge of your account. And I wanted to make it clear to them that they read through your issue with the dealer, the way that they potentially or allegedly maybe have did some things with the contract. And also she had stated that with this particular with this particular dealer, they actually increased the amount of the vehicle because they stated that the lender would not finance a vehicle that was under a certain amount. So it turned a $2,000 vehicle into a $10,000 loan. And I said that I have problems with that, with this contract. My hopes for you and what I want to push for you, advocate for you with this call is to potentially get this whole thing forgiven, that you don't have to pay anything other than what you've already paid on this vehicle, which she had paid payments for about 17 months on the vehicle. So I sent back to the company, and they came back and they said that they're just going to forgive the whole amount based off of me remember, we already had a hardship story. They came down 20%. I gave more documentation and more information to build up the case for them to do 100% debt forgiveness, and they decided to do 100% debt forgiveness. Those three stories that I just shared with you, those are transformational, and it shows you how credit repair can be unique because, people will tell you dispute, make these letters, all of this and that. They never go into the details about how unique your situation could be for your specific credit repair process. And that's why some of the times it's important to seek out professional help, because there's going to be a lot of back and forth, and it could be very unique. Your situation is always going to be unique, but there's going to be, even based on your specific goals, like if you're going to try to buy a house, that credit repair process has to be handled totally different depending on how much time you have between you wanting to go out there and get your loan. Maybe with the couple that I mentioned first, they already had the house in mind, so they didn't even want to lose the house. So this had to be done, and it had to be done quickly for them to be able to move forward. So now, let's specifically get into the Fair Credit Reporting Act. If you understand the foundation of the Fair Credit Reporting Act, I think that it would allow you to be able to understand how you have to move forward and how you need to be looking at the credit repair process and looking at the negative information that's on your credit reports. Because it does not matter if there's an item on there that you owe or you don't owe. Credit reporting is about accuracy. Credit reporting is about accuracy, and it's also about fairness. And now, I'm going to read to you so you can have third-party verification. This is straight from the Fair Credit Reporting Act. The FCRA is a federal law that governs how consumer credit information is collected, reported, and used. It provides specific rights to consumers and obligations for credit reporting agencies, CRAs, and creditors when it comes to negative credit reporting. The Fair Credit Reporting Act includes several key provisions. So we're going to walk these provisions down. Provision, accuracy, and fair reporting. Key word. A lot of people focus on accurate. Rarely do people focus on fair reporting. And that's because it's not defined clearly in the Fair Credit Reporting Act. Really, understanding how fair reporting works, the way that I ended up understanding it completely was from working with clients and disputing information on individuals' credit reports. It came to my understanding from experience. So if you don't have a lot of experience doing this, it's going to take some back and forth to even understand what they mean by fair reporting. So now, accuracy requirements. Credit reporting agencies must ensure that credit reports are accurate and fair. Negative items on your credit report must be verified and correct. Duty to correct errors. If you find errors on your credit report, you can dispute them with the CRAs. The CRAs are required to investigate and resolve the disputes within 30 to 45 days. I say 45 days because from experience, it could take upwards of 45 days. Why does it take upwards of 45 days when it states 30 days here? Because they're getting millions of disputes. They only have limited capacity. And some of the times what they'll end up doing is just kicking back and not really doing an investigation. So you might be saying, well, if the Fair Credit Reporting Act requires them to do an investigation and resolve the dispute within 30 days, those are the key words. Resolve the dispute. Resolving a dispute, it does not say that they have to resolve the dispute in your favor. It just says that they have to resolve the dispute. And this is where a lot of the frustration comes about with credit repair, because they're like, I sent in this information and I know that this is unfair. I know that this is inaccurate, and they just sent back that it was resolved. That's why it is very important to understand the credit repair process. Number one, you should not only just dispute with the bureaus, you should also dispute with the furnishers of that information on your credit reports. Furnishers are either original creditors or debt collectors who place that information on your credit reports. The way that we do it at the Credit Repair Shop, we go at the using the Fair Credit Reporting Act. We submit disputes to the credit reporting agencies, and we also submit disputes / certified validations to the either debt collectors or the furnishers of the information on your credit reports. And they must resolve it. And also, usually you will get a response when you dispute to the furnishers within 2 weeks, but it can still take upwards of 30 to 45 days to update that information or to get that information deleted off your credit reports. You might be asking, well, Steve, why? Why? The reason why is because they don't just go in there and say, oh, because it was inaccurate with your information, we're going to get that information removed right now. No. Companies upload their corrections or upload new information to the bureaus 1 time per month. So if you get that correction done, and maybe they've already done it at the first of the month, they're going to end up doing it the following month. And that frustrates people. But they're allowed to do that. They only have to upload the information 1 time per month to the bureau. So they'll do that once a month, upload that data. Just think about it this way. If you have a late payment or your payment history, not a late payment, but your payment history on an open account, what do? They update the information on a 30-day cycle, correct? same thing. If it's a negative account, they're going to update that information on a monthly cycle. And if they're going to remove that information, it's going to be uploaded with their monthly cycle to remove that negative information. Now, let's talk about the time limits. And this is specifically the way that it's stated. When I say time limits on negative information being able to remain on your credit reports. Now, I want you to listen to the keywords. Negative information cannot stay on your credit reports indefinitely. Negative information cannot stay on your credit reports indefinitely. That means that it can stay on there forever. Late payments, collections, and charge-offs up to 7 years from the date of delinquency. Up to. Keyword, up to. That means that if you do nothing, up to 7 years. Bankruptcies, up to 10 years for Chapter 7, 7 years for Chapter 13. Up to. Keyword, up to. Tax liens. Paid liens are removed after 7 years, and unpaid liens can remain indefinitely. From experience, when you pay a lien, it can be removed. If you don't pay a lien, it's going to be under 7 years. And it says it can remain indefinitely if you don't. Again, remember the first, accurate and fair reporting. Always remember, that's your foundation. Inquiries can stay up to 2 years. Now, notification of negative information. If a creditor reports negative information to the credit reporting agencies, they are often, keyword, often. A lot of people will say, I did not know. I did not know. Here it stated right here. Often required to notify you, especially if it relates to credit denials or adverse actions under the adverse action notice rule. But the key word is often. The key word is often. You always wonder, well, what are the loopholes that the collectors and the creditors are using to not notify you or to have information that's on your credit reports that is inaccurate? Well, often for reporting negative information and often required to. So they may not even let you know. We have a lot of people that come to us and they didn't even know that they had negative stuff on their credit reports or a new negative item. I was just speaking to someone the other day and they didn't even know. So don't think just because the Fair Credit Reporting Act exists that furnishers of negative information that goes on your credit reports are following the rules. They can put that information on there and you can go out there to apply for credit, look at getting a mortgage and they run your credit and all of a sudden this stuff pops up. And what is the answer that most people get? I didn't know that it was on there. Moving on, right to dispute. Consumers have a right to dispute inaccurate or incomplete information. The credit reporting agencies must investigate disputes typically within. The Fair Credit Reporting Act is like littered with loopholes on both sides. It's littered with loopholes that you can utilize to get your credit repaired. It's also littered with loopholes for the furnishers of information to be able to wiggle their way out of stuff or to be able to extend the investigation process. So investigations typically within 30 days. I can tell you from experience, upwards of 45 days. And I can also tell you from experience that they will sometimes send what's called canned. When people say canned, that means that they already had these letters created. And soon as they get disputes, they'll send these letters out automatically. But some of the times they'll send those letters out automatically and still do the work of the investigation and get information removed. I've had that happen with a lot of clients. But I can tell you that those letters, when clients get them, they are very frustrated because they believe that the bureaus are just not really doing their job. They'll get letters like, we appreciate you trying to repair your, work on your credit and dispute, but we don't believe that you were the one that would put together a letter that is this powerful to be able to dispute the inaccurate information on your credit reports. They don't say it that way, but that's basically what they're saying. Credit reporting agencies must remove unverifiable, inaccurate, or outdated information off of your credit reports. We've seen lawsuits out there where they did not remove. One that comes to mind is one lady won over $4 million from one of the credit reporting agencies, and she submitted all of the evidence showing that the information on there was inaccurate, and they just pretended that they were investigating and just kept the information on there. She ended up having to take them to court to get it removed. Restrictions on reporting negative information. Creditors and credit reporting agencies cannot report information they know to be inaccurate. Restrictions on reporting negative information. Creditors and credit reporting agencies cannot report information they know to be inaccurate. So why can information be on your credit report that is inaccurate? Because they will claim that they did not know that it was not accurate. That's like a loophole. If they say, well, we did not know that this was not accurate, how do they know if it's accurate or not accurate? Because they're just basically going off of the information that was keyed in. Humans key in information. Computers grab data from different data points and put information in. Mistakes can be made. So the loophole for them is we did not know that the information was inaccurate. That's why the whole credit repair industry exists, because you have responsibilities. And this was one of the, I think it was the president of Experian or Equifax. I know it was one of the ones with the E. He specifically stated and said that the credit reporting agencies do not have a duty to make sure that individuals' credit reports, the information on the credit report, is accurate. That they said that is not their duty. They said that the individual, you, me, we have the duty to make sure that the information on our credit report is 100% accurate. So they creditors and credit report agencies, they are required to update the report if new information becomes available, i.e. a debt is paid or something that it should not have been on there. Whatever that information is, if it comes available, they are required to either update it or remove it. Now let's get into consumer consent. This is something that's really big out there. People talk about permissible purpose. Access to your credit reports is limited to entities with a permissible purpose. A permissible purpose is they're using it for something that's going to be of your benefit or something to be able to look up information on you. So creditors, employers, landlords. Employers, for example, must get written consent before checking your credit reports. They must get, for permissible purposes of look at your credit reports. Why would a employer look at your credit reports? I've talked about this before. If you're going to work with any financial institution or anything to deal with money, or even with a company where you're going to be in the finance department or something, they're going to look at your credit reports because they're going to look at if you can't handle your money, you can't handle their money. That's just one of the alert systems that they put into place. It could be a red flag for them. Obviously, with creditors, with giving you access to credit cards or capital or personal loans, they're going to look at your credit reports to see how you're handling your other credit that you have. And then landlords looking at your credit reports to see if you have evictions, and also to see if you're, how you're handling your money, because they don't want to rent out to someone who is not going to be able to take care of paying the monthly rent. So now that you had a foundation on what you need to be able to do to be able to move forward, man, I got my kids' pictures blowing here with the heat vents blowing. But so now that you had a foundation, the next step that you need to take is you need to get copies of your credit reports. Look at those credit reports and audit all of the information. Don't just look at the negative information that you know should be on there. Look for negative information that is inaccurately showing, that is unfairly showing. Now you got to do some brainstorming to say, okay, this information, if it's something that could fall under the category of inaccuracy or unfair, now I can craft my dispute letter based on what I believe is either inaccurate or unfair about that negative information that's on your credit reports. That's your foundation. Now, you can utilize some of the laws, or you could just be straightforward. The way that I would suggest is that you just straightforward write them a dispute letter stating what you believe is inaccurate, what you believe is unfair, and what you request for them to do, what your demand on what you want them to do. When you're doing it with the credit reporting agencies, you want them to remove the information. When you're doing it with the furnishers, you want them to review, send you information, and if they don't have it or they can't correct it, you want them to remove that information off your credit reports. So now, if you need copies of your credit reports, I want you to go to www.your3scores.com to grab your TransUnion, Equifax, and Experian credit reports in all 3 scores. That's where you need to start if you're going to get your credit repair journey started. Knowing what's on your credit reports is step 1 to being able to start working on your credit. Link is below this video. If you need help with your credit, if you want us to do it for you, go to my website, thecreditrepairshop.com. Link is also below this video. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. We will do everything that I just mentioned, plus other things that are legal, not anything illegal, utilizing our experience, the same techniques that I use to be able to get my credits, number 1, fix my credit, and then increase my scores to right now 834. Now, you're not going to get to 834 just because your credit is cleaned up. There's going to be things that you need to do to to get your payment history and rebuilding your credit. But I give you that information in this book right here. So we clean up your credit, and you also get this book. So when your credit is clean, you're going to know what to do to get your credit scores increased. If you have debt collectors coming after you, I want you to grab my 3-pack of letters, statute of limitations, debt validation, and cease and desist collection activities letter. Use the one that's appropriate for your situation. I do ask for a donation on those. Those letters can save you time, money, and frustration, and you can also use that to get the process started with disputing directly with the furnishers of the negative information on your credit reports. Thank you for your time. Subscribe to the channel. Post your questions in the comments. This is Stephen A. Williams, President and founder of thecreditrepairshop.com.